Hey everyone, it's Deva and Eric, and we're back with a market update for December. Well, the standoff between buyers and sellers is continuing, with buyers waiting for prices to drop or for rates to come down, while sellers largely hold out for what they believe their home is worth.
That's a good summary of what's happening, and I've never seen anything like it, frankly.
Well, we've been doing this for 19, almost 20 years.
Yeah, I've just never seen anything like this, and really the reason for the current standoff, I mean, aside from interest rates being the primary...
Oh, I was going to say interest rates. Is there...
No.
Go ahead. I'm going to be surprised by your other reason.
Well, the reason that this is allowed to persist right now is the fact that new listings are just dropping down off the charts.
Low supply.
Low supply, essentially, right? The number of new listings, I think the week of Thanksgiving is as low as I've ever seen it in terms of number of new listings in a week. And the amount of homes for sale, as you can see here, is down 11.3% from October to November.
Yeah, let's look at this month over month chart, and then we'll zoom out and look at yearly trends.
For sure. So new listings, as we mentioned in October, we had 2,460 new listings, which was pretty par for the course over the summer months and into the fall. And then here in November, 1,870 new listings. That's down 24%. And this is a function of sellers just not wanting to jump into this market. And it's hard to find fault with that.
And things usually slow down this time of year, but now it seems like that's even more amplified. People are just like, all right, it's the holidays, I'm out for now.
I'm hearing a lot of that. I'm hearing a lot of my agent friends saying, I'm not even gonna try for the rest of the year. Some of my agent associates that I know about are getting jobs for the holidays. There's all sorts of stuff going on that is relatively unprecedented. We continue to take listings and sell properties. We have one closing this week, and then a number of existing and new listings coming up. And confident that we'll still be here in January at least. So
no, we're sticking it out.
Yeah, we're sticking it out. Okay, so that's new listings down 24% month over month, and I believe new listings, and then pending sales not off nearly as much as new listings. And why is that? Well, because interest rates came down a little bit. And there's this handful of serious buyers out there that want to get something locked up before the end of the year. And so those are the ones that are out looking, out buying, and making offers right now. So pending sales are not off as much as new listings. I believe that we're gonna see pending sales remain, I'm not gonna say strong, but I'll say firm for the remainder of the year. Interest rates came off the peak from about 3, 4, 5 weeks ago, whatever that was.
Let's hope that was a peak. At least we're seeing a bit of a dip in interest rates.
Yeah, dip, and everybody's really hoping that holds. And there's a lot of, we won't get into the Fed action and the bond markets.
We could go on a J-Powell rant, but we're not going to do that.
We can do a deep dive on that, but we won't. So again, pending or closed sales off about the same amount as pending sales. So again, this is why prices are somewhat firm. They've come down for sure, but they're not continuing to come down very quickly just because of this lack of new listings and standing inventory.
Well, last time we did this, median price was down, I believe, 4.6%. So it took a pretty decent slide and has slid less this time.
Yes. Yeah. So in October, your median price was $785, and then in November, $770. So yeah, median price has continued to drop down a bit, settle down a bit. At the peak of the market, which I believe was in our March or April report, the median price for a detached home anyway was $1 million. I don't recall.
It was $1 million even.
Yeah, for a detached. This median right here represents all housing. And I don't recall what that number was at the peak. I think it was into the I want to say it was around 875.
Sounds about right.
Yeah. So yeah, median prices come down about $100,000 since the peak of the market in April, call it, but down 1.9% October to November. So that's the month-to-month picture. Let's jump into.
Let's look at some long charts.
Yeah, let's look at the long charts, as they say in the stock market. All right, so let's look at November from 2020, 21, 22. New listings again way down, down 28% from last year, and it was down 7.9% in 21 from 20. So new listings have just continued to go down. I mean, I keep saying that it's a function of sellers not wanting to jump into the market. It's also an element of shifting homeowner behavior. As we emerge into this post-COVID world, folks are deciding to stay put.
A lot of people have really low rates too.
That's the other part of it. You get a really low rate on your home and you look around and you say, well, I can't replace this home with a new home. Even if I downsize, my payment's going to be higher. So let's just stick where we are.
People do need to move though, for whatever reason. They have life events that happen.
Yes.
They move, they get divorced, they grow their family, they downsize.
Right.
So people are still moving, but not quite as many.
And that's why there's always going to be a job for strong realtors who do a good job of staying in touch with their clients and keeping the public informed of what's going on and act in a trustworthy fashion. Like us. So
I do you know anyone like that?
Yeah, is there someone back there? Yeah, so that's November. And then if we look at, and then of course, attached and detached follow a similar looking curve here. Year to date, again, at this time in 2020, we'd had 28,000 listings. And then in 21, we'd had a few less, but not many less. And here we are, 11.8% down from the same year-to-date position in 2021. So again, it's new listings, same story. There's just less of them, and that's what's going on out there. If you're a buyer and you're going, why isn't my ridiculously low offer being accepted? It's because sellers they're hanging on. They're trying to wait you out, and we'll see whether that's a winning strategy or not. But in any event, let's have a look at closed sales, which again, this is the killer right here. This is this affects, I can't really overstate how much this affects a lot of people. Escrow companies, mortgage companies, title companies, termite companies, handy people,
hauling companies,
just
window cleaners,
window cleaners,
carpet cleaners,
contractors. I mean, there are just so many people affected by the fact that sales are off darn near 50% from last year, and that is really the concerning statistic for me personally. When I look at this, I'm like, oh crap, that's not good, and that's the reason that you're going to see a lot of agents over the next few months who are departing this business, because it takes a fairly strong constitution and a little bit of savings, frankly, to weather this sort of a decline. Because when sales are off 50% in the market, that means sales are off 50%, and that's a major deal right there. So we would like to see, hopefully next month, a little bit of a rebound from this low. Hopefully this is the low and it begins to rebound a little bit. October was really, really dead, and most of November until rates kind of settle down a bit. And I do feel more activity out on the street right now. Listings are getting shown more. Offers are starting to trickle in. So everybody should be rooting for this number to come up. Buyers,
whether
sellers,
you want to buy or sell,
or whether you're just a human being on planet Earth in San Diego, you want the economy to be strong, and you want all of these ancillary services to be working. Whether or not you hate realtors and want us to fail or not, that's a different story. But
I know there are a few of those out there. We see you.
Yeah, we see
you in the comments.
We see you out there. That's all right. Yeah, that's all right. We're going to be here. But the point is, this is a big deal for everybody, because
And it's not good for anyone.
No, home sales drive the economy in a lot of ways. I think I did a deep dive on this one time, and in a transaction, in a home sale transaction, there are as many as 17 vendors of one kind or another involved.
San
Diegans, yeah, small business people like ourselves and like many of you. So let's all root for home sales to increase here. All right, so year to date, only off 26% year to date. So year over year looks a lot worse than year to date, but year to date still not great. Not great year to date. That rhymes. I'm making rhymes.
Let's move on to a different slide.
Yeah. Let's
look at something else.
Let's look at something a little happier.
Not that.
Inventory of homes for sale. Once again, this
is new listings that haven't sold and stuff that's been hanging around a while.
Right, and so this now, see, to me, this is it's a little deceiving, because you look at this and you're like, well, inventory of homes for sale is up 60.7%. But you have to remember, last year we were at a crisis level low where there just wasn't nearly enough inventory for the number of buyers in the market to take advantage of what were historically low interest rates. And so that's what caused prices to skyrocket.
And stuff was moving too.
Oh, yeah.
You see this number here, a lot of that is stuff that's hanging around.
Yeah, most of this, this inventory of homes for sale, this is detached. You have to add these two together to get the total. But most of this inventory has been around 30 days or more. So, but also average market time is way, way up. So where 30 days would have been an emergency, 6 months ago, why are we on the market 30 days? It's not uncommon to see listings go 30, 60, 90 days and still fetch close to full price. It's more like a traditional real estate market. San Diego, Southern California, historically the real estate market just doesn't behave like the real estate market in, call it, Middle America. In Middle America, they are very used to putting a home on the market and waiting for their buyer for 3, 4, 5 months. And not necessarily reducing the price every 2 weeks to bring a buyer in. You're waiting for the right buyer. And so there's a lot of that going on right now. And it takes just a lot of sort of guts to be a seller right now, and to decide, am I gonna drop it and run, or am I gonna hang on for better offer?
A lot of people are hanging on.
A lot of people are hanging on. And we'll see whether or not that's a good idea. Okay, so that's inventory of homes for sale. Okay, jumping over to median sale price, November 20, 21, 22. These are detached, these are attached. Prices still on the median showing positive.
Still up a little bit year over year.
Still up a little bit year over year, although as the months wear on, I believe we're going to see more and more erosion of this positive, and it's going to flatten or go negative. My prediction is going to be mostly flat, but we'll see. It really kind of depends on how much new inventory we get after the first of the year. In the last several years, everybody's been waiting for that January rush of inventory that doesn't show up, really. So I would say that median price is probably going to hover around the same spot, barring a dramatic influx of new inventory or further mortgage rate increases.
Yeah, I think that interest rates are going to make or break the spring real estate market.
Absolutely. Yeah, no doubt about it. So median sale price still up year over year, still up year to date, but soft. So let's talk about the reason for the season. The primary mortgage market survey from Freddie Mac.
And the most recent one was a few days ago, but I don't think it's that much different today, so let's go with it.
But we are even more than half a point down from what the previous peak anyway, which was...
We hope that was the peak, but time will tell.
We hope it was the peak at 7.08%. Because it has come down and it has come down again. And this is based on, the Federal Reserve making its moves and investors reacting to those moves in a positive fashion that relaxes mortgage rates. And, you know, frankly, we need these to keep going down to really kind of have a strong real estate market in Southern California, or at least strong enough to support the current median.
Well, whether you're looking to buy or looking to sell, high rates aren't good for anyone. So
Not really,
I think
no.
we should all agree that we need rates to come down.
Yes, unless you're making money on that high rate, in which case you want it to stay high. But anyway, that's not what's happening in real estate. So 6.49% is a big improvement over 7.08. So we're happy about that. 15 year, if you can afford that, is even less. And you know, a vast majority of transactions right now are occurring with either the 2-1, 3-1, or full-on rate buy down. So this is an opportunity for a seller to credit some money to buy the rate down, or a buyer to come in with more money to buy the rate down, whatever that might be, and forever, whatever amount of time you want it to be bought down. But I think right now rate buy downs are kind of the name of the game.
All right, well, is that it for today?
That's about what we have for today, and obviously not all rosy positive news. However, I'm excited for the future. I'm excited for the first quarter of 2023, because I really firmly believe that the economy overall is going to improve, and that we're gonna see an end in the near future to these rate hikes, and that mortgage rates are going to settle. We're not going back to 3% anytime soon, but things are going to settle at a more reasonable rate, and then we'll be able to all carry on with our lives and enjoy 2023. So that's my rosy outlook on things.
Sounds good to me. Well, thank you for joining us, and I guess that's it for this year. We'll be back with some other weekly updates and things, but as far as the big monthly update goes, this was it for 2022. Thank you for joining us, and we will see you in 2023.
Happy holidays, everyone.